These right here are your general ledgers, and I used to struggle with them all the time, right? So it's pretty cool how I get to now teach you guys how to do them. Always learning, always getting better. So I'm also trying to learn how to teach. So if you've got any suggestions or anything like that, please leave it in the comments. I'd love to learn how to teach better. So let's jump right into it. In the last video, we talked about, in accounting, we talked about the accounting equation, said that assets is equal to owner's equity plus liabilities. And just to recap, we talked about assets being a resource, owner's equity being the capital of the owner, and liability being an obligation of the business. So if we're just going to go over a quick example, if, for instance, the business wanted to purchase land, all right, that there is a resource of the business, so it's an asset, and the assets go up. So we know it has to balance somehow in this equation. And they took out a loan, for instance, then our liabilities would go up by the same amount. So our left-hand side went up by an amount, and the right-hand side went up by the same amount. Perfect. So let's look at how we can use it in the general ledger. So these are also known as T accounts, right? T accounts. And the way they work is you put the name of the account at the top, just like that. And our left-hand side is the debit side, and your right-hand side is the credit side. All right. Perfect. And the way the accounting equation, all right, fits into this, it's always important to know the accounting equation, is that assets is equal to owner's equity plus liabilities. And you can see that your assets on the left, owner's equity and liabilities are on the right, or the credit side. Okay, perfect. So if we looked at an example, okay, and we had to learn how this all fits in. And for instance, let's say Pedro, which is actually my cousin's name, he owned a business. Okay, and this business, they wanted to purchase this delivery van that I've got here on the right. And this delivery van, for instance, costs 300,000. How would we record that in our general ledger? Well, first of all, we know that, and for this delivery van, they're paying cash, right? So how would that affect our accounting equation? If we think bank, we know that our assets are going up because this delivery van is a resource, but we also know that our cash, our bank account, another resource, so therefore another asset, is going down, right? Because we have to pay for this delivery van. So how would we then record that? Well, we can see that we have two accounts that are being affected. And as we said, that the T accounts, the way they work is we put the name of the account at the top. So we know that the bank account of the firm or the business is being affected. And we also know that the asset account or the delivery van account is being affected, right? So how would we then do this? Well, if we were to talk about the delivery van, and we know that assets increase on the debit side. So boom, boom, and we also know that bank is an asset. So we know it's boom, a positive on the debit side and negative or decreasing on the credit side, right? From our accounting equation. And so now what do we do? How do we record this? Well, it's always important to put the date. Let's say it happens on the 1st. And now we know the delivery van for the amount being 300,000. Okay. So the amount is 300,000. Just like that. Now, what do we put in the details, which is right there, right? So what do we put in the details? You put the other account's name, which in this case is the bank account. So that would be 300,000. Now, what happens then on the right? What happens then on the bank account? Well, we know that our bank account is going down because it's an asset, so it goes on the credit side, right? So on the 1st again, and we know the account's name is the delivery van account, and it's by an amount of 300,000. All right, perfect. And from this, we actually can create an acronym, and this acronym, or two acronyms, and they are DAX and LIC. And DAX and LIC refer to the positive and negative accounts. It just helps us understand it. So the DAX is on your debit side, and the LIC is on your credit side, right? So what does this refer to? Well, a D in the DAX refers to drawings. Okay, now you might be saying, why is that on the debit side? Okay, because if you think about it, drawings decreases your owner's equity, and owner's equity is on your credit side, so therefore the drawings would increase on your debit side. All right, this can get a little bit confusing. So if you just want to draw it out, pause the video, draw it out for yourself, try and understand it. I'm sure that would help a lot. If you don't need that, then it's perfect. You're amazing. Incredible. The A refers to assets, which we already know, and X refers to expenses. I know. Expenses doesn't start with an X, but it just sounds better as DAX. Okay. And the reason why expenses increases on your debit side is the same reason drawings does, because of owner's equity. LIC, all right. L stands for liability. Okay. I stands for income, and C stands for capital. Okay, capital increases owner's equity. That's why it's on the credit side. Income also increases owner's equity. Okay, so those are all the reasons and the acronyms that we have, right? So now let's look at another example, and we can use our little acronym to help us out, right? So let's say, for instance, that Pedro, right, my cousin, he wants to now, let's say he wants to pay the electricity bill, and let's say the electricity bill, goodness, I hope I'm spelling that right. And the electricity bill, let's say it's 30,000. Okay. And let's say they want to pay by a loan, right? A small loan, and the loan is also, let's say actually that the loan is also 30,000, right? It's also 30,000. So then again, we have two accounts. If we looked at our accounting equation, what would happen? Well, electricity, it's an expense. So what's happening, right? If we just get rid of the rest of these arrows, we can see what's going on, right? So electricity is an expense, meaning owner's equity is going down. Now a loan is going up, so your right-hand side basically just balances out, right? Because liabilities increasing by 30,000, owner's equity decreasing by 30,000. So it balances perfectly. And now we can see that in the general ledger, right? So our two accounts, we call the one an LIC account, which we know is an expense, and we know from DAX that we know that electricity increases on the debit side, just like that. And on the other one, we're going to have a loan account, all right? And you could have the name of the bank here that you're taking out the loan from, right? Name of the bank, okay? And we know liabilities increase, decrease like that from our LIC, okay? So now that we know that, well, how would we then record it? Well, remember, we always want the date. Let's say this happens now on the 14th of the month. Okay, so we know our electricity account is going to increase by 30,000, right? So 30,000, and we know it's coming from the loan account, and then we can see that. So we can see our debit side's increasing by 30,000, and we also know that our loan is increasing by 30,000. Again, you want to put the same date, and we know it comes from the electricity account. And you can see here that these two here are connected in a way, right? They are a debit and a credit, right? When we see that the loan, you can see, okay, we can follow, we have a loan here in our details, and we can then follow it to our loan account and say, okay, yes, then we have the electricity, boom, we can follow it back like that. And the reason for this is known as the double entry rule. All right, the double entry rule, meaning that for every debit you need a credit by the same amount. And so the reason for that is because of the accounting equation, okay? And the accounting equation always needs to balance. That's why it's so cool to, understand the accounting equation. And it's perfectly fine if you don't. I mean, it took me forever to understand it. And if you've got any questions, you can always leave a comment. I'll try my best to answer it. And so that's how accounting is. And you'll see that there's always this double that needs to happen, this action and reaction thing. And so, you're paying for something. How are we paying for it? Okay, you're getting an asset like a delivery van. How are we getting that asset? And that's super important to know. All right, I hope this video helped. Another thing to maybe try yourself is maybe think of examples. All right, maybe think of a business your friend has and think, okay, he needs to buy, a banana, for instance. That's definitely not a banana. He needs to buy a banana, and that banana, he needs to buy 1,000 of them. How will that affect my accounting equation? Well, we know banana is a trading stock because they want to sell it, so our assets would go up. It's a resource, and then what other accounts would be affected, right? Well, let's think about it. We would have to pay by cash. Maybe they took out a loan, but let's say they paid by cash. Our assets would decrease. So the accounts we'd have a credit on the bank account, and we would have a debit on our trading stock of banana account. So you can think about examples, all of that. If you maybe have examples that you want to write down in the comments that I can try and answer, that's perfectly fine. I really hope this video helped. I hope you have a great day. Thank you so much for watching. Hope you understood everything.